It's Fed week, that week where the Fed actually decides our future in the real estate business, how rates are going to do. These people right here, and of course, this guy right here, Jerome Powell, who's actually been hell-bent on getting us to a 2% inflation rate, which definitely hasn't happened. So there's so much conflicting information out there. What is likely to happen on Wednesday? Well, here's what I can tell you. This is the rate tracker here. That they use to track the probability for the Fed funds rate, 99% that we're going to pause, which means it's kind of a foregone conclusion at this point that the Fed is going to pause on Wednesday. But that's not what is really interesting. The market is trying to price in what the Fed is going to do in the future. The bond market and a lot of the Fed probability trackers predicting the Fed to lower the Fed funds rate into next year, both Fannie and Freddie Mac and MBA, both predicting lower rates. But not everybody thinks the same thing, and even people in the Fed have different opinions. And on Thursday, we'll get the press conference where Jerome Powell will speak, and on Friday, we're getting three more members of the Fed speaking. So after that meeting, it's really the market's going to be paying attention to not so much that we paused, but are we going to get more rates in the future? Are they going to cut rates? And that gets priced in early on. Now, when you look at this article here, just to show you how much information is all over the place, this is an article in the Financial Times saying economists expect Fed to defy investors with more interest rate rises. And of the 40 respondents polled between September 13th and 15th, about 90% believe the Fed has more work to do, and nearly half of the economists surveyed forecast the Fed funds rate would peak at 5.5 to 5.75%, indicating one more quarter point rate rise. So what does that mean? It means there's no consensus out there. We're really going to see ultimately who controls the show, is Jerome Powell. But obviously there's a lot of pressures and other people in the Fed. It's really going to be interesting to see if Fannie Mae, Freddie Mac, and MBA have it right, the economists. And the truth is nobody knows. I personally think when you look at the spread between the 10-year and the 30-year and some other factors, my money's on lower rates. I think Fannie Mae, Freddie Mac, and MBA and a lot of these entities have it right. But again, no one knows. And so we'll just have to see what the Fed does on Wednesday. We'll be paying more attention to what they say on Thursday and Friday and how the market reacts to that. And interest rates right now, if you look, still stuck at this 7.3% range, which has been kind of the same for a long time. Remember, everyone's rate's different. You could be lower, higher, depending on points, credit, whatever. But this gives you a general idea. We have been pegged over the 7% 30-year fixed rate in a while. And another interesting thing that I saw, an article from Redfin about how many transactions are falling through. So they say right here that home purchase fell through at the highest rate in nearly a year in August. And this is a quote from Redfin agent, said, I've seen more home buyer cancel deals in the last 6 months than I've seen at any point during my 24 years of working in real estate because they're getting cold feet, because of sticker shock, higher rates, and then maintenance, repairs, and closing costs. And I would say that's 100% true in the sense it's this really strange market right now where sellers, still not a lot of inventory, so they're getting their price, though not as crazy as it was before. And you have buyers who are buying at the edge of their ratios with higher rates, and they really just don't have the money when they're buying these houses, where a lot of them don't have a ton of extra money to do a lot of repairs. And I've noticed that because rates are higher, pushing payments higher, you have buyers trying to get a little less expensive house if they can find one. Some of those houses need a little bit of work, or maybe that's why they're priced a little bit lower. And then you have a seller who says, I'm not going to do any repairs. And then, of course, the lender appraiser requires it. And then you have a deal falling apart because the repairs just don't get done. Now, some of that stuff does get worked out, but I will say in general, you do have buyers that are really first-time home buyers, typical first-time home buyer. They don't have a ton of money. They've saved up $10,000, $15,000, $20,000 for a down payment. And then again, you've got sellers that just aren't that motivated because they still feel like if they don't sell it to this person, they're going to sell it to another. And the fact is the numbers say they're kind of right. So we'll see how this all plays out. Again, my prediction, we'll see if this ages well, is lower rates, into next year. We'll get to see a little peek into that with the Fed really, not so much the pause on Wednesday, but what they say on Thursday and Friday. We'll keep watching the market. As more information becomes available that moves the market, as always, I'll cover it here. Have a great day. Have a great week. Talk to you soon.